Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined today by our macro pro, Benjamin Bry, and our healthcare and biotech pro, David Maris. What did we see interesting since Thursday? I hope everybody had a great 4th of July weekend. It's been hot in New York, I hear. It is typical summer in the Bay Area, freezing cold, which is why I'm dressed like this. So Ben, I saw Trump pumping Dell and Micron this morning. I see SpaceX getting put into the NASDAQ 100 today at the close. That was fast.
Fast. That's why they call it the fast entry rule. Fast entry. It was fast. But you know what Trump did that was really good? He got that guy's red card removed for the game tonight against Belgium. That was good action by Trump right there for us.
That soccer
American
game I saw last night
fans.
was probably one of the best soccer games I've ever seen.
That was a good one.
Those guys were going after each other.
It was raining. It was delayed. That was a wild soccer game. At 100,000 people. Yeah, it was good. It was good. I don't know. This week seems kind of soft on catalysts. I think next week we'll get the earnings going. The banks will start going. You have ASML. You'll have CPI. The jobs report was a little soft on Friday. It was like 57,000 and another 74,000 revised down. I don't know. I think people are a little still, like there's some concern about the AI stuff and the rotation, but I don't know. Seems to be okay today. Seemed to be okay Friday, right? This is also the lowest. This is the low vol part of the year, right? Like, maybe starting next week, maybe starting Friday, you'll start to see a little more. But I think this week is it's like a 2-week vacation, basically. It's like last week and this week are like holiday week, and then earnings gets going, and then the year gets going, and then the midterms. And so enjoy your last week, basically, is my advice.
Enjoy your week off this week. Markets should be quiet.
Yeah, I mean, maybe that's me putting my foot in my mouth. I'm just saying that last week's a holiday week, this week, and we got the World Cup. There's just a lot of things that are going on that I could just see. It's kind of chill out, and then things get really good going, next week, and then the rest of July, and we have earnings, and so on and so forth, basically.
Problem is everybody on the East Coast can't go outside, so they can't really go out and do fun stuff because it's too damn hot.
Is that right, David?
Maris,
you can't even go outside?
It is. Well, today actually is pouring rain, so no, that's a different reason. It's cooled off, and so we're going to get a couple days now of cooler, but the last few days have been 100, 104, 102, so that's kind of unprecedented around here, New York, New Jersey area, but really unbearable. So maybe you're going to have some people moving back from Tennessee and Florida back to California. Maybe we'll get a new influx.
Maybe.
Well, it's been quite nice here in Los Angeles, I will say.
I will say the ones coming back will not be as wealthy as the ones that have left. So just to be clear about that. I mean, healthcare has been actually really strong. The XLV's had some of its best time in the last couple months. That rotation from tech help them. It's always defensive sector. The XBI has just been strong on deals. More and more deals. Then people think, okay, this is the next one that gets taken out. And when they're major deals, when they're like $50 billion deals, that takes a company out from doing other deals for a while. But a lot of these have been $1 to $4 billion deals because the XBI had been down for so long. There are some good, and the science is getting really good that now they can do multiple deals. So Lilly, as I've mentioned a bunch of times, they've bought more deals, more companies than I thought there were companies. Today, Novo Nordisk announced a $1.1 billion upfront deal to acquire a London-based company in cancer. I'm not entirely sure anyone's tracking any of these. If any investors are looking a year or 2 years from now saying, hey, what happened to these? They did it with Pfizer, because Pfizer did a giant deal a few years ago. And last week, one of the drugs that was supposed to be the highlight of that deal blew up. and so, and then there was a bunch of financial press of, hey, maybe that deal wasn't so great, whatever. Without that deal, though, they'd have a gaping hole. So they did it for two reasons: one, to fill the pipeline, but the other to have like a revenue, pothole filling thing. I will say I had a nice checkup with Teladoc last week. Companies can't really talk during a quiet period, so you want to get your calls in before the end of the quarter, ideally 2 weeks before the end of the quarter. We didn't talk about the quarter. We can't, the question that I usually ask companies around this time, or like I said, 2 weeks earlier, is there anything that you think you said during the quarter in a public forum that you think people should have paid attention to that I might have missed? So in other words, I'm putting that on them to help me get up to speed to all the conferences I didn't attend, all the conference calls that I might not have listened to. And they can highlight like, hey, yeah, we've said all the time, this product is a slow start. It's not going to, and they'll walk you through, what you may have missed, what you may have been less sensitive to, what some highlights. If you have 40 companies, 50 companies in your portfolio, it's hard to keep track of every little detail. So it's good as a good reminder. It also puts front and center, what are their priorities? Like, what do they want you to know? And so what they said is what Teladoc explained was they had said that they were rolling out this institutional product. So telemedicine covered by insurance. So their BetterHelp platform. But the rate limiting step for that was getting enough therapists that are qualified and registered. And they don't just have to register, they have to meet some minimum qualifications and quality control. But there's probably a lot of argument about how hard those hoops are, but we'll just leave it at they can't just turn it on. So last quarter they had said they were working on that really, really hard, and that that they had about half the country covered, and so hopefully they'll have more progress on that this quarter. And I asked them whether or not, is it like, if I were doing it, right, you'd start with, if you could only do half the country, you'd start with California, Florida, New York, New Jersey. Like, let's go with major states. And they said, no, it's not like that at all. Like, it's just different states have different requirements. Different states it's more difficult to recruit. So it might not be that the first
go where there's less regulatory hurdles.
Yeah. So it's like, it might not be a linear path higher. I didn't take that as a warning. I just took that as that's just, be aware that this quarter we'll see more progress on that, and maybe some of the bigger ones came in. Now, just because you turn something on, just because you buy a dishwasher doesn't mean you get your dishes cleaned automatically. So it's so I think that's another thing to keep in mind, is that this is a slow process turnaround. They're not going to turn on this insurance thing and all of a sudden but all I'm looking for is no whammies. Like, they didn't have a giant setback. They didn't mention anything that, hey, by the way, we've been telling people, be careful, this is really, really difficult. There is some seasonality that makes this quarter a little bit lighter, but I think people, I'm still there. I haven't sold it. I had put in a limit order for more that was just slightly below where it was trading on Thursday or Wednesday or Thursday. And it just took off. So it's like, the second you do those things and try to be cute for a dime.
They call that a dick for a tick.
Yeah, that's kind of what I mean. Yeah, I heard a tick for a tick, and that's probably right, whatever that means. It's just not worth it. It's just not worth it, right? It's like you're trying to eke out a half a percentage point on your purchase when this is a turnaround. It's not you're not day trading it. So it's a little stupid. I have that order still out there, so we'll see.
Okay.
Yeah, healthcare's been pretty good, David, lately. It's the only sector that's not in a drawdown right now, actually. As of yesterday, or as of Friday, I should say. And the positioning is pretty light. I was looking at the different sectors positioning last night on the podcast, and bottom third percentile on a 10-year, 15-year look back. So, there's you could see that cyclicals, materials, like a lot of just basically everybody's just in semis and whatever, that whole trade just took so much share as a percentage of the S&P 500. I mean, in 2020, at the semiconductors were 5% of the S&P 500. They're now 19.7. And that's 15 points of market share of the capital allocation of the S&P 500 that's been taken from other areas. So, one way to be short semis is be long some of this other stuff, and then when it reallocates at some point, you get a re-rating up, right?
It's just really hard, right? Because when you have companies buying other companies at such a rate, you have the GLP-1 trade kind of over, and it's difficult unless you're in the weeds to be like, I'm excited about this company. There's
Yeah.
not a theme. So you have the individual investors or the sector specialists that are doing that work, and they're like, okay, I like this company. And then you have everyone else who's like, well, what's hot right now? AI is still pretty hot, right? That's transformative. It can change the, okay, well, I need to be either there or less there. They're spending a lot of time and bandwidth on that, not a lot on, okay, well, how's Merck's quarter looking?
Yep.
I will tell you,
David, is
that
there
makes sense.
anything?
I'm hesitant
Is
to
there
say this one
anything to
story
this?
because it's a really good friend of mine. But this to give you a sense of where we are in the market. Someone I know was out at the Hamptons this last weekend and looking at houses. They were at a resort looking at houses, and I said, "Well, how's the year going?" And they're like, "Oh, horrendous." I was like, "Well, the year's not so horrendous if you're shopping for Hampton houses on the 4th of July."
Right.
So.
Can't be that bad. So, David, is there anything to this to Medicare covering GLP-1 costs now? I think that's a new thing effective July 1 with a
Yeah, I
$50
don't know.
copay I saw.
I didn't see the exact date, but yeah, it was supposed to start soon, and that's the kind of thing that I've explained. This race to the bottom on pricing is great for Lilly and Novo.
Right.
It's great and it's bad, right? So what's bad is obviously pricing is coming down. But if you're the two biggies and you can get reimbursement, and all these Medicare patients now come on this and get paid, or let's hope that they're not switching, right? That they're not switching from cash pay to. But if they're getting onto Medicare and Medicare is going to pay for it, guess what? They're going to do what a lot of either one of you. I don't know if you've done this, but you get a prescription for something, and you say to the doctor, like, "Hey, can I get a refill?" Like, I just make sure you put 2 refills on there, or especially if it's like something like dermatological that is not life threatening. You wouldn't want to do that
Right.
with like a heart medicine or something, or prescribe it yourself. But so if you're getting Medicare to pay for something, guess what? Doctors love this. Hey, yeah, great. I'll write another prescription, no problem. But guess what? Every 6 months you're coming in to visit.
Right.
And by the way, that's free too. And so it's like it's a huge benefit because you lock in those patients. So all of a sudden, I think it's priced in at this point, but all of a sudden, maybe it's underappreciated a little bit that you get these lifetime patients. So
Any update on our favorite topic, Hims, to speak
no,
of?
the Hims House put out last week that the quarter looks hot. That it's like they're everything that they track the credit card data, the website traffic, all of that looks better than expected, better than what analysts are saying. The data point that I thought was most interesting is that they're somehow tracking repeat customers and return customers, and return customers have ballooned up this last quarter. So take that for what it's worth. It was I think Dunham did a conference recently. If I were he, I'd stay in the office and work. Like just but he just kind of
So when he
he
goes out and
sometimes
opens his
says,
mouth, he sticks something in it.
yeah, he just says a little too much, and it may happen. Like all these things may happen, but they just sound a little aspirational. So execution is really what matters. The stock's actually pretty interesting here, I think. I mean, if they do blow through the quarter, you're going to get a whole new, hey, they went through this I don't
went
know
through the
if you
soft
agree,
patch.
but yeah, I was going to say, I think investors that get caught up in these, it's not really a meme stock, but kind of a meme stock, where they get caught up in something. If it underperforms for a little while, they'll return to it en masse. If they underperform for a year or two, forget it. You're done. Like I've moved on from NFTs to Bitcoin. I've moved on from Hims to SpaceX. But if they put in a good quarter and the stock pops, guess what? You're going to get that same, hey, wait a second, I need to be day trading this. I like it longer term. I was really intrigued to see this data.
If you didn't own it, would you buy it here? I know I
Yeah,
asked that a
probably.
lot.
Yeah,
Yeah.
probably.
Okay.
I'm not a,
Take a.
this is one where you can, and Ben and I have talked about this. This is one, it's such a great trading stock. You can always buy it, right? If you miss it
Right.
this week,
There's always an
it's going to come
opportunity.
around,
10% down.
it's going to go around again. So I wouldn't be like, hey, but the data that they've been tracking has been pretty accurate of how things turn out. The question that they can't track, or the thing they can't track, is spending. And I've
Right.
said this before, that what they're doing is very expensive, building new platforms. All right. So now there is also this peptide meeting coming up where the FDA is going to decide whether or not to bring on new peptides. So you're taking a huge binary risk today if that doesn't go through. Now, everyone thinks RFK is pro peptides. He said it. I mean, he's been on Joe Rogan saying it. So it's not they think it.
Yep.
He is.
Yeah. Yeah.
But the FDA came out last week with the pre-meeting documents. So before an advisory panel meets, the FDA puts out their notes. So that the experts that are coming together to vote now the experts coming together are mostly pro peptide people. So they get it though, and the FDA says they don't recommend that any of these are allowed to be compounded. At least that's what I read. So maybe it's if it's 1 out of the 10, whatever. So what happens? Well, if they get it, if it is recommended, I mean, the stock's probably up 20, 30%. And there's no mathematics behind that other than this is the momentum of what's been happening.
Right.
If it doesn't happen, I'm sure it's going to be down a lot. I think that would be a mistake. So the most cautious thing would be wait, hope that the FDA doesn't do it, and then you have a great opportunity. If I had to guess, I'd say that the FDA's the FDA weighing in has nothing to do with what these experts are going to say.
When is that roughly, do you think?
I want to say July 12th and 13th, but let me just check real fast.
Okay. And Ben, speaking of meme stocks, have you been following the
so I take the 23rd and 24th.
23rd and 24th of July? Okay. All right. So put that date on your calendar as it relates to Hims. Could be some volatility.
What meme stock are you asking me about?
I was going to ask you about the GameStop eBay. I heard your buddy interviewed on a podcast recently and made a pretty compelling story for why he's doing it.
My buddy? What buddy is that?
He's been making the rounds. What's that? Cohen. Ryan Cohen.
That's not my buddy. You must be talking about somebody else on Wall Street beats his buddy.
That was sarcasm.
He's no friend of mine.
I know. So did
no,
you have any?
I have nothing. I have no opinion on that.
No,
I mean, okay. I saw it. I thought it was ridiculous. I think that guy's ridiculous. I think the whole thing's like, who knows? I mean, I remember, I'll just give you a quick story. I remember in 2004, I believe, or 3, I remember I was in a strategy class in business school, and it was when Comcast was trying to buy Disney, if you remember this, right? Like, they're like, hey, they were going to do a levered LBO of Disney. So this is 22 years ago.
Like AOL buying Time Warner.
Even worse, but yes, similar. Because Disney was like 3 times as big as them or something like that. So they're like, the little guy's going to buy the big guy. And I remember and it never ended up going through, but I remember thinking that it's like, I just there's not very many good examples in history where levered buying the bigger company works out. Like you can work out, and like private equity's done a good job of taking leverage and buying companies, but like in terms of like two mega caps or mid caps, or it just doesn't work as well.
Just a lot of
And
leverage.
I mean, David, can you remember any cases of this when this would work?
No, it's leverage is like if I had to say there's like one metric to watch out for, it'd be how levered is a company, because when things always go bad, and when that happens, that's the worst thing to be. So
Oh,
gasoline.
yeah. I mean, it's like what Charlie Munger said. The only way a smart guy can't get rich is the 3 L's: leverage, liquor, and the ladies. So
yeah.
Good advice. All right. Anything else you guys want to cover before we wrap here?
Don't think so. That was good. Good kickoff to the week.
Good kickoff to a quiet week.
Yeah, by the way, speaking of leverage, I'm reading this thing called The Bubble That Broke the World.
What is that?
I'll send it around. It's really fascinating. But it's about how leverage is what created the depression, and so it's right up your alley, right about what the essays are that you've been writing about. So
yeah, okay, yeah, send it. I'd be very interested.
And Ben, where do these essays that you've been writing about have been great?
You can find I publish them on Wall Street Beats. I can publish them on Wall Street Beats, and then I also can find me on my Substack, which is at Capital Misallocation, and I'm going to publish one today or tomorrow comparing the current LLM boom to the British railway manias of the 1840s, which was widely considered the greatest speculative capex boom in history. They got up to 8% of GDP spent on the build out of the railways. And one of the interesting things that was a parallel was, the government was kind of bought. The government was kind of all in on the trade, and you look at DC kind of similar. There was some report that came out recently about how much insider trading has been going on. Like basically of all the trades that the Congress has done, like 80% or 75% were stocks that were benefiting from a bill that was signed like 3 months later. It's pretty gross, right? And there's that, and then there was also like
Trump mentioning Dell and Micron today wasn't random.
Yeah, I mean, like, the Trump thing's bad though. Him making $2 billion or whatever it was on crypto, and then like there's like investors that lost $2 billion. There's not a good way of sugarcoating that, is there, David?
It's funny, right? Because I think everybody has a tolerance for. Okay, so no, I shouldn't say everybody. Hunter Biden making a few $1 million. He's not really an artist and an expert in oil and gas, but someone buys his paintings for $200,000. That's bad, right? It's bad. It's worse when it's like other governments, but okay. But you thought that Trump, since he railed against all of this, that it would be above that, or that he'd cash in after the fact. But not a good look. Not a good look.
No,
and I saw something like 80 trades a day. 80 trades a day. Like that's.
He's got a robo. He's got a robo taxi doing his trading. Robo trader.
Yeah.
I mean, but yeah, I mean, the point is about the whole thing is that ultimately the infrastructure lasted, the technology lasted. Is just that the capital, the shareholders' capital didn't last. So that's
right.
You could. The whole point is that you can have a technology work, you can have the infrastructure work, but that doesn't mean that people funding it off the chute will be winners on it, basically. And we've seen it before many times.
Yeah. All right. Well, on that cheery note, let's wrap it up. Enjoy your Monday, everybody. Hope everybody's enjoying their summer. Go Team USA this afternoon.
Go USA.
And we'll hope Belgium loses their appeal with FIFA this afternoon. I don't know if you saw that, but they appealed the ruling. where Donald
Well,
Trump
it's our best.
FIFA.
It's our best player. I mean, you can't blame him for doing that.
I saw some pretty awesome memes over the weekend, over yesterday, with the with the ruling.
The Trump card.
The Trump card. Yes.
I'm gonna give Belgium a thumbs down on that. You know what? Just play on. What are you gonna be like?
Yeah.
It's one thing to be quiet that it wasn't a foul or it was. It's another thing to try to reverse a decision. Yeah.
Right.
Well, it also was a bad call. Like, right? Like it was clearly just an incidental contact thing. So, like, I mean, if the guy did something really bad, then I would feel much dirtier about this. But I think it was an actually bad call. So, anyway, let's win tonight, boys. Let's get it to dub.
Indeed. Let's do it. All right. Have a great week, everybody. We'll see you back here tomorrow.
All right, guys. Later.
Thanks, guys.